it's hard to predict what the Chinese authorities themselves are going to do vis-a-vis their own market, but I can definitely confirm that global investors, institutional investors in North America and to some extent in Europe are definitely shifting away from China. The same way the governments themselves are talking about de-risking, investors are doing the same. And so we've definitely seen a slowdown to a trickle of inflows, but we are also seeing some divestment out of China. We're seeing in the United States growing popularity of emerging market ex-China ETFs. And so I've said this before on CNBC, China's too big to ignore. China needs to be considered as part of a global portfolio, but how and where it evolves is really one of the most confounding questions right now. The government of China is not even making it easy for foreign portfolio management firms who have done everything right and opened up shop in Beijing and Shanghai. And so I expect some underperformance. I think Chinese tech stocks are very much hostage to government policy. And there's so many opportunities elsewhere in Asia that many investors, certainly in North America, are not considering it as essential as it should be.
Yeah, understood, Stephen. I know that EMX China, you like Thailand, India, Indonesia as well. The one geography we haven't touched on yet is, of course, Europe, or rather old Europe. Compared to the U.S., compared to Wall Street, I know you think these markets are in much better shape. Many of them are at or above 52-week highs as well. Problem is, I mean, when you take a look at the monetary policy situation, the ECB, which is up at bat this week as well, is more likely than not to hike again, to keep at it, and they seem to be in a much more aggressive sort of mode than even the Fed.
Yeah, if you asked me a few months ago whether I thought European markets would be pushing at 52-week highs or even multi-year highs, I'd be hard pressed to find a fundamental reason for it, except certain European companies. I mean, you look in France and you have LVMH, a global dominant luxury maker operating worldwide, and you understand why the French index is doing well. And you do have global leaders really at the highest weights in European benchmarks. But the markets themselves are showing us something, that there's a healing going on in Europe, and their performance has been stellar. I don't know if some of this has to do with some of the government policies to promote investment. Certainly we see that in France. But from a global investor perspective, not having exposure to Europe, I think is something investors can't look at. Just one more market that I can't resist mentioning is Greece, which 10 years ago was truly bankrupt and was the basket case of Europe. The Greek market over the past few weeks has hit all-time highs. So there is positive trends going on in Europe, and I think it's Europe's time to surprise people.